Hello there, my name is Robert McLean. Welcome to the Prime's Real Estate Market Update. Let's run through some of the recent action on Central Europe's industrial markets. We're going to begin in the Czech Republic, where some of the most interesting deals have been happening. Let's start off with CTP, which just signed its first tenant at CTPark Louny II. The tenant's name is US-based PEI-Genesis. They're taking nearly 5,000 square meters of distribution space, and handover is slated for November this year. PEI-Genesis makes connectors for data centers, defense, telecom, and the energy sectors. The company locked into the Czech market by buying out a local firm in Louny back in 2023. Fast forward a couple of years and they're consolidating European distribution under one roof. The park itself will offer 36,000 square meters on 9 hectares of land right off the D7 motorway. So it's not a generic 3P deal, it's a niche industrial tenant digging in deeper. Moving down south, VGP filled the last slot in Hall B at its park in Ceske Budejovice. The final tenant there is Direct Auto, which took just over 4,000 square meters that it will use for vehicle sales and after-sales service. The 8,700 square meter hall is now at full occupancy. So this is looking like a win for VGP's small business unit concept, which allows for a mix of storage, retail, and showroom space under one roof. The logistics giant Dachser has space elsewhere in the project, but the big story is right next door. It's a 51,000 square meter build-to-suit for pet food producer Vaffo under construction now. Woof. If you do the math, VGP's park will be one of the bigger logistics clusters in all of South Bohemia. It comes to 130,000 square meters across 7 halls, all along the D3 motorway. Finally, we've got Accolade, which filed an EAI application to build 28,000 square meters of warehouse on the old Kraluv Dvur ironworks between Beroun and the D5 motorway. This one's notable because it's a brownfield. Co-owner Milan Kratina told Hospodářské noviny he's on the lookout for brownfield sites on a long-term basis. Soil remediation will be expensive, but that kind of access to the D5 is getting pretty hard to replicate on a greenfield. So let's put some of those deals into context, something we can do because the Industrial Research Forum just released their Q2 numbers, and they're worth unpacking. Total Czech industrial stock has now reached 13.78 million square meters, vacancy having risen 5 to 5.8%, which was up 110 basis points quarter on quarter, and roughly 1 percentage point year on year. About 796,000 square meters is currently sitting empty. But before just reading that as weakness, gross take-up hit 451,000 square meters, which was up 45% year on year. Net absorption was 40% up at 248,000 square meters. That's a lot of numbers overall, so just know that tenants are actively leasing, but new supply is outpacing absorption. The construction pipelines currently sits at 1.11 million square meters, but here's the key shift. Speculative construction dropped from 36 to 26% of that total, so developers are pulling back a bit on spec. Is the market self-correcting? Could be. Prime Prague logistics rents are now stable at between 7 and 750, while city logistics in the city top out at 10 euros per square meter. Q2's biggest deals in Czechia were a 41,000 square meter renegotiation at Prologis Prague Airport, a 30,000 square meter pre-lease at CTPark Louny II, and a 30,000 square meter pre-lease at Panattoni Kladno for e-commerce distribution. So vacancy may be up, but it's creating tenant leverage in places like Pilsen and Ostrava, so no panic at the moment. The research firm suggests the market is recalibrating, not contracting. So let's move on now to Poland, where the first of the big deals that I'm going to tell you about today comes from Logisteed. Logisteed Poland expanded its footprint at Panattoni Park, Warsaw North, to 50,000 square meters. That's an 18% increase over what they already had there. That park is now fully leased at 88,000 square meters total. It's right off the S8 expressway, about 30 minutes from central Warsaw. The expansion is volume driven. They need the space to keep up with customer growth. The next deal is from DHL eCommerce Polska, which signed 2 leases with Hillwood, totaling over 20,000 square meters. One of the DHL sites is Hillwood Zgierz near Łódź, where they're taking an entire building. The second lease is at Industrial Park Tychy in Silesia, where Hillwood is refurbishing space to meet DHL's operational and environmental standards. One thing I didn't know was that DHL runs nearly 24,000 parcel drop-off points across Poland. That's always going to require a pretty big logistics footprint. Finally, we have 7R, which launched 7R Park Warsaw South 3 in Sekocin. This is a 47,000 square meter park across 2 buildings, with construction starting this month. They already signed their first tenant before breaking ground, Strefa Tenisa. That's Poland's biggest online tennis equipment retailer at 3,500 square meters. This marks 7R's return to the Warsaw market after a multi-year break, and they picked one of the most established logistics in southern Warsaw, right by the S8 and the Opać junction connecting the S2 and the A2. Finally, let's move to Hungary, where the standout deal is the 80,000 square meter build-to-suit at CTPark Budapest Erd. CTP signed a major international logistics operator there, but they haven't been able to name who that is just yet, for what is one of the largest single industrial pre-leases in Hungarian history. Delivery is set for the first quarter of 2027. On a smaller scale, CTP also signed quick service logistics for a 10,000 square meter build-to-suit at CTPark Budapest Veches. Completion there is October of this year. So for context, Hungary's total industrial stock hit 6.5 million square meters in the second quarter. Despite 118,000 square meters of new supply landing in the quarter, national vacancy actually fell down to 13.2%, with Budapest at 14.8% and regional markets tighter at just 10.5%. That tells you absorption is simply outrunning the pipeline at the moment. So that's all I've got for you today. As ever, go to theprime.cz for more in-depth data or get in touch with me to tell me what you'd like to hear more about, and see you next time on the Prime Market Update.